So let's kick things off with a pretty simple question. What makes a company really pop on an analyst's radar? Today, we are going deep on one such company that's been making some serious waves in India's maritime sector, Knowledge Marine and Engineering Works, or KMEW for short. Okay, let's just pause on this for a second. When a major firm like Nuvama, a big institutional player, starts covering a company, you pay attention. They have entire teams digging into this stuff. So for them to come out of the gate with a strong buy rating, well, that sends a massive signal to the market. Let's find out why they're so optimistic.
Now, this number right here, this is where it gets really interesting. 1,500 crore rupees. This isn't some pie-in-the-sky forecast. This is their actual confirmed order book. For any investor, this is gold. It gives you what we call revenue visibility. It's like knowing exactly what your paycheck will be for the next few years. That takes a whole lot of uncertainty off the table.
So, who exactly is KMEW? And what do they really do to make all this money? Let's break down the actual business. The easiest way to think about KMU is as the essential behind-the-scenes crew for India's entire shipping network. Their main gig is dredging, which is basically just underwater construction. They keep the ports deep and the shipping lanes clear so these giant cargo ships can get through. And on top of that, they build, they repair, and they rent out their own fleet of vessels to the biggest players in the game, India's major ports and key government authorities. All right, so what's really fueling all this optimism? Let's unpack the three main pillars that make up the bull case for KMU. This is really the heart of the whole investment argument.
And that brings us to pillar number one, that big and, more importantly, diversified order book. You can see it's not all coming from just one thing. A big chunk, almost 60%, comes from charter hires. Now, these are long-term contracts that provide really stable, predictable revenue. The rest is a mix of dredging and shipbuilding. In an industry that can be kind of up and down, having that mix is absolutely key for building resilience.
So, the current order book is impressive, for sure. But the future pipeline, that's where you see the potential for some truly explosive growth. The company is actively tracking potential projects worth more than double its current orders. Now, of course, that's not guaranteed money in the bank, but it shows you the sheer size of the opportunity that's out there. And all that potential translates into some really eye-popping growth projections. Nuvama is forecasting a compound annual growth rate, or CAGR, of 58% for revenue. But here's the real kicker. Look at the other numbers. EBITDA is pegged to grow even faster at 62%, and net profit at an absolutely staggering 71%. Whenever you see profits growing faster than sales, that means the company is becoming more and more efficient, a sign of a really high-quality business. Okay, so those are some pretty aggressive numbers. The big question is always, are they actually grounded in reality? Let's take a look at their latest results to see if the real-world performance backs up the story. And when you look at their last quarter, one number just jumps off the page. 90 crores in revenue. That's a 56% jump from the same time last year. This isn't a projection. This is what they actually did. It proves they can deliver on that big order book. And that strong top-line growth is what's really driving the whole story. So what does a 43% margin really mean? Well, it means the business is incredibly profitable. To put that into perspective, for every 100 rupees in sales that came in the door, KMU turned 43 of them into operating profit. That is an exceptionally strong number for any kind of engineering or infrastructure company, and it's a huge reason why analysts are so excited. Now, we need to talk about a strategic move that could be a massive tailwind for the company's profits for years to come. It's a structural advantage, a kind of secret weapon that many of its competitors just don't have. KMU recently got approval from the government to switch over to something called the tonnage tax scheme. It's a special system designed to make shipping and marine companies more competitive. Basically, instead of paying tax on the profits they make, they pay tax based on the size or capacity of their fleet of ships. So why on earth is this such a big deal? Well, this chart says it all. They're going from a pretty standard corporate tax rate of, say, 25 to 30%, down to an effective tax rate of less than 1%. That is an absolute game changer. It means almost all of their profit is going to drop straight to the bottom line, which frees up a huge amount of cash that they can use to grow the business even faster. Of course, a story that sounds this good has to come with some risks. A smart investor always looks at the other side of the coin. You have to know what could go wrong. So, to go after this massive opportunity, the company recently raised almost 285 crore rupees from investors. Now, on the surface, that's great news. They've got the fuel they need for the growth engine, cash to buy new ships, to bid on bigger projects.
But, and this is a pretty big but, when you actually start digging through the company filings, a monitoring agency report shows a really crucial detail. As of their last report, none of that cash they raised had actually been used. It's just sitting in a bank account.
And this brings us right to the single biggest risk here: execution. Look, having the money and having the orders is one thing, but actually turning that potential into real, operating, profitable projects, that is the true test. Any big delays here could really sour the market's high hopes.
And beyond just that main execution risk, there are a few other things to keep an eye on. First, they are heavily dependent on government contracts, so any change in government policy or spending could hit their project pipeline. And second, since they win a lot of work through competitive bids, there's always a risk that someone else will come in and underbid them, squeezing their profit margins.
So when you weigh this incredibly powerful bull case against some of these very real risks, what's the final takeaway for an investor? How do you put all these pieces together?
Here's how it balances out. On one side, you have this really compelling growth story. You've got a massive visible order book, incredible profit margins, and this game-changing tax advantage. But on the other side, the whole thing really hinges on their ability to execute. The risks around deploying that capital, the reliance on the government, and competition, those are all very real.
So at the end of the day, the entire investment case for KMU really comes down to this one simple question. All the raw materials for success are there, the orders are signed, and the cash is sitting in the bank. The future now depends entirely on management's ability to execute. It really makes this a classic high growth but also high risk story for investors to watch very, very closely.
And just a quick reminder for everyone, this analysis is purely for informational purposes, and it's all based on publicly available data. It is definitely not financial advice, so please, always make sure to do your own research before making any investment decisions.